Park South, I saw on your Facebook group, the River Park South and Loving It, that somebody had some questions about mortgages. So they said, should I get a mortgage from my bank or should I use a mortgage broker? So today I've got with me Karen Beckingham with Verico OneLink, and she's going to answer some questions about you about a mortgage broker versus a bank. So what can you tell me, Karen?
Well, thanks for the introduction, Nicole. The difference between using a mortgage broker or a bank, a lot of it has to do with the amount of product we have access to. So when you're dealing with a mortgage broker, we're going to sit down with you. We're going to take a look, fully pre-approve you, take a look at your financial situation, take a look at how you're getting paid, and make sure that when you go in to make that offer, that we have an idea of which lenders you're going to be most comfortable with. When you're dealing with a bank or a credit union, they have one product. They may be experienced in that product, but they also have to have a lot of knowledge about the rest of the products that they have on hand. When you're dealing with a mortgage broker, we get paid a commission. So it's very important to me to make sure that my client's mortgage closes, because that's the only way I get paid. So after an investment of my time, some financial investment, I want to make sure that that mortgage closes. I have the ability to do that because I do have access to more than one product. Whereas at your financial institution, you may discover at the very last moment before your financing is due that the product that they have available to you is not going to work for your financial situation.
Right, and so I think a lot of times when stuff like that happens, it's the more complicated and different clients. So somebody like me who isn't salaried, I earn a commission, people who are self-employed and stuff like that, they need access to a lot of different products.
Definitely, especially with all of the regulatory changes that have happened in the last number of years. It's made it more and more difficult for even the average person to qualify. So part of my job, my duties to my clients are to sit down and make sure that we put together a way that we can make sure that they get approved. Self-employed people, people that are on commission, people that have newly started positions with a company. Those are all challenges to just a particular lender sometimes. We also have access to alternative lenders that take a look at things like that a little differently. Maybe your credit isn't as stellar as the financial institution may want, so then we go and we look at another lender that might be a little more okay with that kind of credit. Self-employed people, commission people can be very hard because as self-employed people we have a lot of write-offs. Commission people may not have been in the industry receiving their commission long enough for us to be able to use that commission. So we take a look at those situations and decide whether we can fit them with the more traditional monoline lenders, or are we going to have to go to an alternative lender? As a mortgage broker, we do have access to the banks and the credit unions, but the majority of our lending is done through companies that we classify as monoline lendings, and that is all they do, is mortgage lending. They may not have a bricks and mortar on every corner, but you have access to your mortgage broker. I've been around for 15 years, so I've got clients that know where to find me, like Nicole. Yep. And you also get online access, you get telephone access, and most of the financial institutions, you can take a look. You can see a little bit of history about them on the internet.
Okay, so let's touch for a moment about the hours that you work.
It's very important. As Nicole knows, we had a client a couple of weeks ago that found a house and offers were being accepted on Monday. They hadn't been pre-approved. They weren't expecting to do this right away.
And this was on Sunday.
And
this was Sunday.
So I get a call on Sunday and I speak to the clients and we get them organized so that they can make an offer to purchase first thing Monday morning. We went through what kind of income I'm going to need, how they are paid, so I knew how to present it if they did get the house. So they were fully pre-approved going in Monday morning after talking to them on Sunday afternoon. Yeah. Most other times, if you're using your credit union or your bank, you may have to just wait until you can get a hold of somebody on Monday.
Well, and I just had the same situation. I had an open house on Sunday. Offers were Monday. the guy loved the house, and so yeah, we got to get that pre-approval so they can make that offer on Monday. So it's really important, because with real estate, it's almost a 24-hour job, and we're always out there, we're always working and making deals happen and getting the homes for our clients. And so it's important to have the right partner that can make sure that they're getting the mortgage done as well. I'm sure people have questions about how you get paid.
I get paid a commission. So the difference being that as a mortgage broker, we are paid only if we're successful. And because our business is built on word of mouth, our business only grows if we're successful as well. Whereas at the bank, they're going to get paid a salary. Whether your mortgage completes or not, they're still going to get paid. Whereas I'm not going to get paid unless I make sure that that mortgage closes.
Okay. I think that's about it, unless you had any other points that you wanted to touch on, Karen?
I think one of the major points that I'd like to touch on is the difference in how different financial institutions register the mortgage on the property. The credit unions and the banks will register as a collateral mortgage, whereas a lot of the monolines and some of the smaller credit unions still register as a standard charge. There's a big difference between those two, and it's important to me that when I'm talking with my clients and we're sorting through which financial institution they're going to be most comfortable with, that they understand that. There can be some benefits to the collateral mortgage, but there also can be some real downsides to that collateral mortgage. And if anybody's interested in learning more, just Google collateral mortgage.
Yeah, and I think now that you've mentioned that, it's twigged for me, right, that it's about more than just the rate.
It is about more than the rate.
So yeah, you might be paying a slight bit more, but it could be for a very good reason that could be very beneficial to you.
Exactly.
Yeah.
I mean, typically our rates are competitive and sometimes a little better than what you're going to find at the credit unions and the banks. It all depends on the market, but there are times when if that's the house you want, then going to a different financial institution to get different prepayment privileges or be able to increase your monthly mortgage payment easily. Those factors may save you more money than the 0.05% in the difference of the interest rate.
I know I said that's it a couple minutes ago,
Yeah.
but penalties.
Oh, yes. That's something else. When part of my process with my clients is, our initial interview can be an hour to an hour and a half, and we go over what the differences are so that they can make an educated decision about whether they want to choose a monoline lender, which are the lenders that all they do are mortgages, or a credit union or a bank. One of the main differences that I feel it's important to bring to people's attention is the average most people choose 5-year terms, some variable, but most of the time it's 5-year fixed. But things happen in life, job changes, family changes. And if you have to sell your house prior to your 5-year term being up, you want to make sure that your penalty is not going to eat up all of the equity that you've developed in that house over the last number of years. With the banks, they take a look at their penalties slightly different, whereas the monoline lenders and the credit unions look at their penalties on a more basic level, and the difference can be thousands of dollars. Thousands.
Yeah, because I think our favorite story was the client who was going to break their mortgage only a couple of months early, and was going to be, what was it, $7,000 or $8,000 just to break their mortgage a couple months early. At the same time, and that was with a bricks and mortar. And then at the same time, we had another client who was looking at breaking hers. What was it, like 3 years early?
3 years early.
And her penalty was like $1,500.
With the monoline lender, it was $1,500. Yeah, that's right.
Yeah,
it was $1,500. Where the other clients, they wanted to get a better rate, which I certainly could have offered them, but by the time they would have received the funds for their house, they wouldn't have had enough money left over after paying the penalty to be able to put down on their new house. So they had to stay with their current bricks and mortar financial institution until that mortgage matured.
Yeah. All right. Okay, I think now that's it.
That's it?
So I'm Nicole Hacko, I'm with Royal LePage Top Producers. If you have any other questions about mortgages, feel free to comment below and I'll make sure Karen gets those questions. And at the same time, if you have any other questions at all as it relates to a home, so whether that be like plumbing, electrical, any handyman kind of stuff, mortgages, how a realtor works, anything like that, let me know and I'd be happy to do a video for you. Thanks so much, Karen.
Thanks for joining us.